This is the Investor Connect podcast program. I'm Halti Martin. I'm the host of the show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Well, hello, I'm the host of Investor Connect, Halti Martin, where we connect startups and investors for funding. Today we have joining us Gerard van Swieten, managing partner at LvS Partners. LvS Partners specializes in funding and executing the international expansion of innovative growth stage companies. They're especially active and experienced in Asia-China expansion. Gerard, thank you for joining us.
Well, thank you very much, Paul.
Well, great. So your firm does expansion investment. What is this and how does it actually work?
So expansion investment is the art of investing in a company and then expanding it to a new market. So it's a very active type of investment. So in practice, to give you a concrete example, a few weeks back, we invested in a Singaporean company called PropTech, which does basically IT service for the real estate sector. And we invest, and at the same time, we start working on their China expansion. So that can be a China expansion through a strategic joint venture. And in a few weeks, we've gotten already pretty far with that joint venture. So in the long term, that value-added strategy of connecting a B2B company, in our case, we only invest in B2B high-tech companies. So the value of helping that company expand to Asia and China in particular is a huge value-added strategy. It's a huge driver of value gain. So that is the expansion part. Now, of course, there's different facets to this. You have to be, there's different options to invest and there's different options to expand. So what differs us is that we're very hands-on the expansion. So we're very on the ground. We take over that company's China expansion, that company's Asia expansion. So that means having the teams on the ground to distribute products, managing factories here, managing production here, all these facets. So that is where we see the biggest, the biggest challenge for tech companies today is to reach Asia and particularly China. And it's very hard for a company to do that without having senior management personnel on the ground and kind of having board members or even shareholders on the ground. So that's what we combine.
Well, great. So how have you incorporated this strategy in your firm's practice? And what have you done so far in this area?
So we have 2 funds and made investments over currently 10 portfolio companies. So these 10 companies are in biotech. We have a company from Israel called Silent Seed. So they make they're an early stage a drug development company, NRAI drug. We have 5 companies in new energy, ranging from battery technology, fuel cells, to energy saving technologies, to recycling. And we have 4 media entertainment companies. So these are more IT companies, software companies mostly. So we built that up. We're very active on the ground expanding those companies. So that means every week we help those companies execute their Asia, in particular China, expansion strategy. And so we work extremely close with the senior management and report back to them constantly, how the expansion is going, what the results are, what we can do more. So it's a very on the ground, active post-investment strategy. But in some cases, we also use expansion as a pre-investment strategy. So this is a little bit different because, as you probably know, if you come to a company and you ask them, okay, do you want to, they're looking for investment, and then you you want to expand, and they will usually say, yes, yeah, let's do it. How about you invest first, and then we go expand. But in some cases, we want to see first whether this company can, in fact, expand and whether their technology is ready. So then we will do a pre-investment expansion. So there's a lot of different options to do, and that's where the nuance is, and that's where we, given our backgrounds, have been working most on. So I've been here in China for 12 years. My partner, Nick Laursen from Denmark, has been here 12 years as well. So we really focus on that in practice kind of knowledge of how to do it on the ground.
So what are the advantages of this strategy over other ones, such as the value-added strategies?
Yeah, so the advantages are for the company is that you get smart money. You get not just investment, but you also get access to a new market. Potentially, you can reduce production cost. As you know, China is, especially in Asia, China is the biggest player and the fastest moving market. When you look at the macroeconomics, the gravity point of the world is already moved to Asia. There's so many more STEM graduates. There's so much more GDP. There's so much R&D budgets. So in our opinion, for every European or let's say American or Western, because we also have Australian companies, but every Western company, they're either their key competitors coming from China or Asia, or their biggest market is going to be China or Asia. So we help them make it their biggest market, rather than sit in Europe, sit in the US and say, oh my God, there's another competitor coming over the next 10 years. So that's the clear advantage for the company. And the advantage for the investors is that when you come in as a partner, as an investor, expansion investor, you come in at a different proposal to these companies. So you always have a seat on the table when you're talking not just investment, but you're also talking in expansion. So this creates a better preferential investment terms. We can invest in investment terms that are better because the company wants us involved, because it strengthens their team, and it kind of gives them also a different kind of return, which means, we are in different markets now. We have an expansion in Asia. We have new users, or we have a strategic partner, or we're able to produce at different prices. So that is how it works for both.
Great. So what's the primary trend in the Asia-China expansion for Western companies?
The trends have been moving for a long time. So as you see now, you see actually a lot of foreign companies are reducing their manpower here. So you see more and more expats moving out of China. Of course, pre-COVID, this was already happening, but now post-COVID, it's getting more. I would say that most of the international communities have been cut in half. And there's several reasons. One, of course, is people going home before COVID and never returning. The other one is the pricing. So expats employees have been quite pricey compared to Chinese employees, and Chinese employees have become more competitive. What that means, though, is that you're still looking for somebody that really understands your company abroad and really understands the Chinese market and can build that bridge. So that long-term trend is something that we see a lot, because a lot of foreign companies also, let's say, shoot themselves in the foot when they're going too quickly for a Chinese partner, or they're choosing too quickly for a local CEO without really knowing that person. So there's a trust gap that is widening, and we are there to build bridges in that trust gap and basically achieve that a lot of different corporations can be executed, because you have a third party involved. You have your investor who also knows the other side, who's down on the ground, who knows the market here, speaks the language, has a wide network, and is able to execute.
Great. So what makes for a successful company to invest in and expand to China? What are the characteristics?
So in our case, we have a whole set of criteria where we check these companies on for China readiness or Asia readiness. So this includes the readiness of their technology, but also how it can be. Is it ready for mass production? Is it ready for mass use? Because in many cases, people underestimate what mass production or mass usage does to your product. If you have, for example, IT, and you're looking at 1 million users, and now you're looking at 10 million users, then let's say the small problems in the software become very visible. And the same is for production. You need to have a product that's ready for mass production in China, and there's a lot of challenges that come with it. So that's what we check. Number one. We also do a lot of checks for the management. So when we meet managers, we need to be sure that they are, let's say, open-minded enough or have the right viewpoint about China to be able to work on an expansion here. So those are the main criteria. And for us, we invest in three categories. All B2B, so we don't look at expanding brands, consumer brands to China. I must say yet, you never know. But biotech, healthcare, industry 4.0, and especially new energy. These are categories where China is really looking for foreign technology. And currently, with the 2030, 2060 agenda, so the decarbonization agenda in China, there's such a gigantic need and an opportunity for Western companies with suitable technology to move to impressive scale very, very quickly. So that's China. You can move to scale you cannot imagine at a very quick speed, and so that's what we do.
Great. So what else should we know about this segment? What do you think is the key criteria to make this thing actually work?
To make the expansion work, or to make the investment work?
Well, both. I assume if the expansion's working, the investment would work, or is that not the case?
Yeah, that is definitely the case. So that is also why we are so hands-on. So if the expansion works, if you have any Western company that has successfully been able to have a sustainably growing China business or a China sales channel, that company globally becomes very valuable. So it's really about making sure that company in the 21st century has not just access to, let's say, European company has access to the European market and the American market, but is also able to have inroads in Asia and China in particular. That is going to be the defining factor for a true multinational. So when you're looking at investments, I would say it's rather turning it around. It's rather saying, how can a company be truly successful if it's missing out in the future in about, at least half or 1/3 of the world economy, if it's not present there? If it's not present in the fastest growing sector, how can it truly compete? If it's not connected to the most advanced production chains, how can it really perfect its technology and perfect its product? So that's how we see it.
Well, that's a good point. So what changes do you expect to see in the coming 12 months in this area?
Not too much changes. It's been going on for a long time. That's what we see. So we are also very much on the ground. So we are really active with our projects. And one of the advantages is that you're very detailed, but it also means that you're less focused on let's say macroeconomics, because so much is determined in how you execute. Even in a difficult market, you can win. So that and the larger changes really have been happening for a long time. I think the most impressive trend, and let's say for the next 12 months that will continue, is decarbonization. I think each one of us, who would have thought 5-10 years ago that oil companies would really, that most of the car brands are going for 100% electric. It's incredible. I mean, and also in China, because worldwide there's a large perception of China as, oh, this is just a polluting country. but China is moving for a carbon peak in 2030 and complete carbon neutrality by 2060. And if you see that, it's basically the world's factory, right? Then that's even more impressive. Wow. And if you talk with large Chinese companies, you find out that the large, especially the energy generation companies, they have a limitless budget for new energy, and they cannot build another coal plant. So it's so extreme. Who would have thought? And so this is going to continue. And there's a lot of niches in this. So there's a lot of niches for different new energies, for different types of batteries. And I think that is something that everybody should get on board with. And it's a good development, so we should support it worldwide.
Well, that's a good point. In the last few minutes that we have here, what else should we cover that we haven't?
I think we covered everything. I think one of the final things to say is that in our opinion, so we are a little bit different in that we're very hands-on, working very closely with the company. And we really see that is a trend that I think will continue because you can kind of always, most investors look for the same thing. And there's an overcrowdedness and, looking for the same kind of companies, looking for the same kind of strategies. And I think being very hands-on is something that for many investors is quite uncomfortable because you need to be in the fields, you need to be in the factories, you need to be in the distribution teams everywhere. But I think in the future, that is where a real big differentiator is because, just if you look worldwide, I'm sure the same in the US, there's basically everybody's going to college. So, having a college degree or having, being able to think at a college level is not really that unique. What is unique, I think, is somebody can use a college degree, but also can execute on the ground and also can understand investment. So it's no longer about having the perfect the perfect Excel sheet, but I think it's going to be increasingly about what can you execute in my company? What can you bring to the table and execute? And so we see that, our experience is really that even when we are, investing in companies that have much larger investors on board, that is still a differentiator that always gets you on the table because it's something so different. So I think that's a trend that is very positive, and I hope that more investors will roll up their sleeves and really actively do something in companies rather than have a large strategy. I mean, this has always been our approach, and so I hope that continues.
Well, that's a great point. I hope it continues as well. So how best for listeners to get back in touch with you?
Yeah, listeners, please connect with me on LinkedIn. LinkedIn is the preferred way. We always watch this. We have a LinkedIn page for Laursen van Swieten as well. So we show our all our updates whenever we start an expansion, whenever we complete an investment. So people can follow us there. Please connect.
Great. We'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you very much, Martin. It's been a great experience.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.